Keith Fitz joins us this morning for our market coverage. All right, Keith, welcome back to the show. Good to see you again. It is the Fed's last meeting of the year, starts tomorrow. It's a very big deal for the markets and for the economy. What do you think they're going to do?
I tell you what, I sure hope they do the right thing. The transitory call, Stuart, has got to be one of the single worst market narratives in Fed calls in history. So I hope Jerome Powell has learned from this. I hope that he is very measured in his tone, because the biggest risk is that he gets it wrong. I'm going to go on record and say we are going to get a Santa Claus rally this year because he's going to understand the error of his ways.
Oh, wait a minute. So you think, well, wait a minute, I don't get it. I don't get this. If he understands the error of his ways and stops printing so much money and talks about rate increases next year, how could that produce a Santa Claus rally? I would have thought it would produce a sell-off.
Because, and this is a very nuanced question, and you're spot on, if he says we are just going to dang the torpedoes, we're going to increase faster than we have to, we're going to take things down as fast as we can, that's what's going to cause the hiccup. On the other hand, history has shown that if it's a gradual increase and he says we're going to have a very measured approach to this, we realize we've made some mistakes, the markets can adapt to that. That's the Santa Claus rally scenario.
If you look at this historically, has there been a period when interest rates were rising and the stock market rallied?
There have, and unfortunately you got me on this because I don't have those numbers at my fingertips, but there have been very short periods, a year or two at a time, where the markets have adapted to this. What we don't want is an instantaneous increase a la Volcker, but even that came out of the tank 14, 18 months later. So this is not an overwhelmingly negative concern. The bigger problem is all of this money printing, because that is very much a kick the can scenario down the road.
But nonetheless, you think we're in for a Santa Claus rally. Stock prices continue to move up before Christmas, right?
I believe that he has learned from his comments a few weeks ago, and he won't make the same mistake twice. And I sure hope that I'm correct in my read on that one.
What would you say if this meeting takes place this week between the president and Joe Manchin, and they don't appear to get an agreement on Build Back Better? What would the market do then?
You know, that's a very tough call, because anything that creates uncertainty is what the markets don't like. Right now, they've got a beat on companies like Apple and Pfizer, JP Morgan, some of these great companies that are doing great things. If there's an uncertainty factor that gets introduced, the markets are going to reset a little bit. But I am still going to look to a much higher 2022.
Much higher 2022. I've got to leave it there because I'm almost out of time. Keith Fitz, I hope you're right. Only time will tell, of course. You know that one. All right, thanks, Keith.
Yep.
Right, we've got...
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.